What's up everyone, it's Scotty with MoneyVest. So this market update video coming out a little bit later than usual because I needed my sleep. The last week has been absolutely crazy with the Fed meeting with a lot of earnings. So I do apologize for the delay here, but hope you guys understand. As always, make sure that you drop a like and of course subscribe to the channel if you haven't already. I would really appreciate it. And the link to our Discord and Patreon is going to be down below if you're interested in joining and of course getting access to all the member benefits, including the TradingView charts, members only private videos, buy and sell alerts, options alerts, trade ideas. I mentioned specifically in our Discord that moving forward, we're going to be focusing on very, very high quality setups. These are going to be directional trades on the NASDAQ and the S&P 500 because we're running some analysis on the markets with respect to volatility and some other technical indicators, including the market breadth and the M7 index that we have created. So the results are very good so far. And I will be sharing these opportunities with everyone. So if you want to get access to those trade ideas as well, links are going to be down below. Apple reporting earnings with a lack of some guidance, or especially in a weak outlook, selling off a little bit over 3.5%, and getting rejected exactly at that lower high and that resistance that we have been mentioning for Apple. So EPS came in $1.46 per share, so beat on EPS, revenue just shy of 90 billion, beat on revenue. iPhone revenues coming in line with expectations. Mac revenues was a miss because we know that there's been a significant slowdown in MacBook sales. And iPad revenue coming in with a strong beat, 6.44 billion. Variables coming in just shy of expectations. Again, a miss there. Margins did expand to 45.2%, and because of services revenue, once again, making a slightly higher contribution compared to hardware, and coming in with a beat of 22.3 billion. And once again, Apple did not give any formal guidance, but Luca Maestri said the company expected December quarter revenue to be similar to last year's revenue. However, Apple said that December quarter this year will have one fewer week, so we are expecting somewhat flat to down quarter in Apple's earnings. And this is a launch quarter as well, believe it or not, because Apple released a new iPhone right every September, and October, November, December ends up being the launch quarter, which is usually the best time of the year for the company. And the fact that they're saying that it's going to be somewhat similar, right, or either it's going to be flat or slightly down, just goes to show how much demand is slowing down for Apple iPhones as well. And look, everything is directly linked to interest rates, right? Discretionary spending is going to be linked directly to interest rates. So that is a pretty big deal. And of course, we've seen that with Tesla, we've seen that with Enphase, we're now seeing it with Apple as well. So it lacks a clear path to grow this holiday season after 4 straight quarters of a shrinkage as well. And I'm kind of surprised that, Wall Street definitely does love Apple a lot. I mean, Apple is kind of like a staple stock in the market. So even with guidances like these, even with numbers like these, I mean, Apple kind of holds its ground really, really well in most scenarios. In most situations, Apple continues to hold its ground very, very well. So that's where we are, and this is what the markets look like. We did see a very risk-on environment, as we talked about in our previous videos, where, lots of stocks pushing back higher. Tesla up 6%, Nvidia up 2.7%, PayPal up 6%, Eli Lilly pushing higher, Apple pushing higher. I've got lots of videos to catch up on. I have to do videos on Apple, of course. I'll be doing videos on Fortinet. We'll be doing videos on Qualcomm, Supermicro Computers, InMode. So there's a lot of companies that have already reported earnings that I need to get around. So I've got my day very, very packed up. So, but nonetheless, very strong momentum coming in with the markets here, with that technical rebound that we talked about in our previous video. So all 11 sectors in the S&P 500 were green on the day. The last week's performance has been phenomenal, and the last 1 month also, we've seen a lot of momentum for a lot of majority of sectors in the markets. Of course, only healthcare and communication services pulling back. With the lean hog prices pushing higher, coffee prices, cocoa, feeder cattle, everything pushing up. Orange juice with a little bit of a pullback, considering that it's up like 300% in the last 2 years. It's only normal for us to see a bit of a pullback here. And Bitcoin struggling just a little bit, down back under 35,000, and Ether also just under 1,800 as well. So this is the sell-off for Apple after hours, down about 3.4%, and taking down the market somewhat with it. The NASDAQ is down, the futures slightly down about 26 basis points. And this right here is the overall technicals, where you'll notice the lower high and the lower low pattern are kind of like a falling wedge. And we talked about $180 as being a very important resistance. So this right here was the level that we were talking about and got rejected exactly at that price. And then, of course, selling right back down. And support level is going to be down to 164, 165 for Apple. So this right here is going to be that level to pay attention to for Apple moving forward. So that's the lower high and, of course, the lower low for Apple at the moment. We'll talk more about it in more detail when I do the earnings video. I'll do a dedicated, more separate video on Apple moving forward. I do also want to mention that if you want to connect with me on Instagram, link's going to be down below. The username is going to be at CastWRP. I would really appreciate it. And I do share a lot of behind the scenes stories and posts if you want to connect with me there and are interested to learn more about the P&L. I do share profit and losses. I do share a lot of different things on my Instagram as well. So link's going to be down below, and we'd love to have you on board there as well. So going over to treasuries. Now, we have seen a pullback, right, back down to 4.66%. I did a video on why this is very, very important, because there's a negative divergence, right, with the yields. So you're seeing that higher highs in the yields and that lower high in the RSI. So the breadth isn't as strong as what we have seen before. And the last 3 times that this has happened, or at least a couple of times it's happened, the markets have, in other words, the bond market has rallied and the yields have rolled over. And we are seeing something very similar over here right now. As you can see, there was a higher high, and the yields are now starting to roll over, and they're already down over 8%, back down to 4.66. Now, this is big catalyst driving the markets higher, because innovation, tech, and more specifically, if you take a look at riskier stocks, right? I mean, we had Palantir, Shopify, Roku, Lemonade, we had InMode. A lot of these companies like rally like 20, 30, 40%. Like, this starts to kind of feel that 2020 momentum once again, when we had a lot of stocks just kind of flying higher, double digits on the day. Marathon up 10.5. We got Upwork pushing up almost 9, Grow Generation up over 6%. We had, Endava up over 6%, Squares up over 7%. Of course, PayPal up over 6.5%. So SoFi up 7.7%. So we did have a lot of momentum, and all on the back of, in my opinion at least, the Treasury yields falling, and again, creating that risk-on environment in the market once again. So it is really, really important. It is about as critical as it gets for the yields to roll over. If you do see this acceleration once again, so like, for example, the yields kind of bounce off of that 50 EMA, and then we push right back up and then get a breakout past this 5.2% to new highs, that is going to be problematic for the market. So what we really want to be witnessing or seeing is, of course, we come down to the support, and then to eventually break down below this, then settle in around 4.2, 4.3, and then possibly even lower at sub 4%. Would just be ideal for the market, for risk-on environment, for risk-on assets, and for the NASDAQ to also find some momentum, because NASDAQ is down over almost 20% from its all-time high. So it has hit a bear market, an official bear market, and the S&P 500 is down a little bit over 14%. So if you come over to the NASDAQ, a very, very nice momentum. So I did mention in our Discord that I did miss the entry on the TQQQs this week, because the ideal entry would have been around here, 12,650, for that momentum back up. Looking at our setups and looking at the volatility, we were at 23. So if you come over to the VIX, you'll notice that we were as high as 23 before we started to come right back down. So this right here was the level. October 23rd, we got up to as much as 23. We pulled back, we got it back up to 22. And since then, 3 to 4 consecutive days of volatility getting crushed down almost 30%, now sitting at 15.6. So that VIX cheat sheet that's in our Patreon, that's going to be super helpful. That's available for all the members. It's going to tell you exactly what the current read is and what percentile we're in and what action is necessary, right? In terms of whether the VIX is normal or whether it's rare. And right now we're still in the normal category. But of course, as soon as we got up to as much over 23, 25 is when we start to get in these somewhat rare to rare categories where it needs to, basically we need to take action and take advantage of that opportunity. And that's exactly what happened here with the NASDAQ pushing higher. So I did miss my entry on the TQQQ this time, as I was kind of formalizing the overall reports and the setups, but I did add a lot of VUG today, because I do think that there's maybe more potential to the upside, and that's for the long term anyway, so I don't mind dollar cost averaging at those prices for the Vanguard Growth ETF, on maybe even semiconductors, SMH as well. So that's where we are. And again, this is the NASDAQ chart. Next resistance is going to be all the way up to as much as 13,600. I do still want to point out that we are, very much in the context of a downtrend still. In other words, we're still making this lower high and this lower low pattern. So we're not out of the woods yet. So it's not like, today's rally or the rallies that we're seeing right now in individual stocks means that we are completely okay. We're back to all-time highs. We're going to break out over these resistances. It's possible, right? It can happen, but we have to wait and see and wait for confirmations, really, right? We have to wait for those signals, in other words, breakouts to happen in order to be more and more confident that, okay, this is indeed going to be, some more momentum for the markets to the upside, and it's possible that we get back up to all-time highs. Same thing with the S&P 500. So again, you can see that we are very much trading in this sort of downtrending channel of lower highs and lower lows, and the next resistance is going to be all the way up to 4,400. And until we break past that level, I think it's going to be very important for us to keep in mind that we are still trading inside this downtrending channel. So it's starting with Apple, and again, we talked about Apple here, lower highs and lower lows, so getting rejected right there, and then next support is going to be all the way down to 163, 164, if it continues to trade inside this falling wedge pattern of lower highs and lower lows. So that right there is going to be that downtrending channel for Apple at the moment. Amazon here getting a very nice breakout as it did after the earnings. And right now, this right here is going to be a support level to watch for Amazon moving forward at close to 134 for the company. And next resistance, of course, is going to be all the way up to 146. So this right here is going to be that level to watch for Amazon, and support level is going to stay put roughly around $136 per share for Amazon. So we did have a little bit of a lower high, lower low pattern, so like a falling wedge, similar to what we're seeing for Amazon, and then with a very nice breakout to the upside for this company. Tesla, once again, recovering back higher. So this right here is the lower high and the lower low pattern. So you can see the lower highs and the lower low downtrending channel within which, Tesla's been trading at. And now it's starting to move back higher in this downtrending channel. So in that lower high and lower low, we are now starting to move back up over $218 per share for Tesla at the moment. So this right here is going to be the support level once again, and the next resistance is going to be all the way up to $240 per share for Tesla. So this right here is going to be that next level to pay attention to for the company. Talking a little bit about Meta platforms, and Meta here also getting rejected on the day. So you'll notice it's one of the fewer stocks that was actually red on the day, right? So that's quite interesting because once again, we're coming up to that resistance for Meta. So we're getting that rejection there, and support level is going to stay put down to $293 per share for Meta moving forward, all the way down to as low as $275 per share. So this right there is going to be massive support, huge resistance at 319, 320, and very, very important intermediate support sitting roughly over here at $293 per share. Talking about NVIDIA also moving higher, no doubt about it, because of the risks, because of the risk-free yield, which is the Treasury is falling back lower, and support level is going to stay put at about $400 per share. So this is going to be a massive support, resistance all the way up to 482, and we already know that there's been a lot of consolidation sideways in that range for NVIDIA at the moment. Talking about advanced micro devices, and AMD also had a very nice breakout the other day, up over 9.6%. Resistance going to stay put at about $112 per share. So this right here is going to be that level to watch for AMD. And of course, a massive support sitting right over here, which we'll go ahead and turn that level into a support now. And it's going to be sitting roughly in the low 100s. And of course, a resistance all the way up to $112 per share. Very, very important level of resistance and supply over there for AMD. Talking about PayPal, and PayPal here had a very nice, interesting day because it actually, opened higher, then sold back down to fill the gap, and then it got bought back up. So if I go over to the 5-minute chart, it was just all over the place, right? So this is a just quite an interesting rally. Like it basically sold off, over 5% as soon as the market opens, and then it quickly got bought up by 4.3% moving higher. So basically closed where it opened. And it had a very interesting, I should say like a dragonfly emoji or something, like a dragonfly candle, where this right here is, just a massive wick on the downside with a very small body. And it's, of course, going to be coming up to its resistance now at $57 per share. So this right here is going to be that resistance for PayPal moving forward, and support level is going to stay put at $51. Talking about Visa, And Visa also moving higher very, very nicely. I mean, just the amount of momentum that's coming in for Visa as well, almost 2%. Very strong. Next resistance is going to be at $250. And similar to Palantir, Visa did not break down from this neckline, from that support. Instead, it bounced right back up from that level of 228. And the next target and resistance is going to be at $250 per share. Talking about Netflix, and Netflix here on the day also moving higher, 1%, back up to that resistance at 452 is going to be that level to watch for Netflix moving forward. Talking about Google, and Google also here getting a little bit of that momentum downward. So intraday, there was a red candle, green day, but a red candle does suggest there was some weakness in the price action. We're coming up to that gap fill over here. Support level is going to stay put at roughly around 126, 127. So that is going to be that level to watch, and resistance all the way up to 139 to $144 per share for Google moving forward. Talking about Microsoft, and Microsoft here also seeing a very nice momentum back up over 65 basis points, and support level is going to stay put roughly at around these levels at close to $340. But next target and resistance is going to be at 366 for Microsoft moving forward. So those right there are going to be some levels to watch, with the support sitting roughly at 340 down to $310 per share. And finally, talking a little bit about Costco and Enphase. Enphase did have a little bit of that momentum today. I don't know if that held up or not, but Costco pushing down slightly, coming up to that resistance of close to $563 to $575 per share. So this right here is going to be that level, and support level at close to $531 per share. And finally, Enphase did rally 2.8%, so just under $79 per share. It is incredibly oversold, but a couple gaps to fill. And it's kind of gone through a very similar process of gapping down, selling off for 3 days, and then finding a green candle, gapping down, selling off for 3 days, then finding a green candle. So twice this has happened. So maybe tomorrow it gaps down again, sells off, and then finds support at 59. No, I'm just kidding. So, but the bottom line is that there's been a lot of weakness, right? There's been a lot of momentum downwards for companies like Enphase, SolarEdge, First Solar, because of the guidance cut and the higher interest rates that are hurting the solar sector. But that being said, I think the companies are still pretty solid. They're well capitalized, more cash than debt. And yes, some of them are now swinging to a loss, but Enphase still continues to hold its ground with higher margins, higher profits, and of course, not to mention good, decent growth on a year-over-year basis. So resistance is going to stay put at $80 all the way up to $92, and support level really is going to be sub 60 for Enphase. So hope you guys enjoyed this video. Found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel, and links to our Discord and Patreon is going to be down below. We'd love to have you on board as a MoneyVest member, and also do connect with me on Instagram if you want to. The username is going to be @CastWRP. And you'll be able to see a lot of behind the scenes interesting stuff and stories that I post online. So as always, happy investing, and I'll see you all in the next video.